Hello, it's Laurie, or BlockchainBrad, and today we're talking about all things Kava, and we have the CEO in the hot seat right now. His name is Kerr. Brian, thank you very much for giving us an exclusive update into all that Kava is doing right now.
Yeah, thank you for having me, Brad. I'm really excited to be here and answer kind of everything, both in the minutiae and in the grand scheme of Kava, what we're doing, and let everyone know.
Mate, I'm really grateful also for your time. I do know that you're busy, and there is no better source than the CEO. So for all those wondering, this is entirely free. There's absolutely no payment, no sponsorship, no under the table deals going on. This is about information from Kava for all of us to better understand what their plan is and what they're actually doing technologically to drive innovation in the DeFi sector. Now, I mentioned DeFi, Brian. Let's go into this a bit more, mate. On your website, in your information, it's very clear that you're DeFi for crypto. Can we dig deep into that? What does Kava represent in that context, and what are you really trying to do?
Sure. Let's first just say what it is. DeFi is like the meme of the year. We use that as a marketing positioning because all of what we're doing does fall into the category of trustless lending and other DeFi services. But what Kava really is a cross-chain lending and stablecoin platform for major cryptocurrencies. Okay.
Now, for those who are wondering, perhaps are new to crypto, cross-chain obviously enables for more than just one chain. Give us a rundown on who you're talking about, or which chains when it comes to the cross-chain capacity.
Sure. Where we're focusing, so we built Kava, the platform, to be a generalized platform that can add in a number of assets. And we built it on the Cosmos SDK, which makes connections with other blockchains much easier than it would be otherwise. But the assets that we're starting with are Bitcoin, XRP, Binance with BNB, and Atom.
Mm-hmm. Okay.
And then once those are set up by us, then everything else will be on a community basis of what we adopt. So let's say Bitcoin Cash comes and a bridge is built for Bitcoin Cash to move into our platform. Our community would vote on if they want that asset to be supported and to offer DeFi services to them. And if it passes, then that would be added.
Got it. So essentially, mate, you're an agnostic lending platform. You offer those services in the financial sector. And you mentioned also, importantly, that you're working with Cosmos specifically. I've had a look at your advisors, and there's even Cosmos reps there. So what made you choose Cosmos? What made you choose their SDK specifically?
Yeah, so maybe I should start with how Kava got started. Okay. We only launched our blockchain and the concept of what Kava is in June of this year, but our company has been around for over 2 years, and we've been building in the space primarily as a research and development firm focused on interoperability. Mm-hmm. And even from the early days, we believed that a Tendermint consensus was one of the most ideal trade-offs between decentralization and throughput and security.
Yeah, I would agree with that.
Yeah, and while there are trade-offs, I do think as a blockchain developer, using the Cosmos SDK, which uses the Tendermint consensus, is one of the fastest ways to get started. And for us, we're not consensus experts, so by no means were we trying to build that ourselves. That wasn't our differentiator that we were trying to offer to the world. Mm-hmm. What we were trying to build was a great collateralized debt position system to offer DeFi services to. And what the Cosmos SDK allows us to do is just launch a blockchain with the Tendermint consensus and build a very scoped smart contracting module just for our use case. And it allows us to set the parameters to choose the exact security model we want to make all the incentives work for our particular use case.
Right.
So those attributes were just super nice using the Cosmos SDK. And then just as another shill for Cosmos, we've done a bunch of development on Ethereum. We've built payment channels for DAI and ETH, and we did integrations into wallets and other things. Developing on Ethereum is a horrible experience as a developer, and it's because writing in Solidity is troublesome. Using the test nets are troublesome. They don't quite match the mainnet sometimes. You can build code that is supposed to run on a testnet that is 100% matched to the mainnet, and it might work on the testnet, but then when you move it to mainnet, it doesn't work for some reason. It's just very frustrating.
So you've tried, there's been trial and error from the team, obviously, from what you're saying.
Yeah, I mean, we've been developing and researching for, more than 2 years in crypto, and it's always been focused on sort of cross-chain activities. And it's like, while we could build this system on other blockchains, it was just the easiest to execute and meet all the requirements that we had using the Cosmos SDK.
Got
And
it.
just from a development standpoint, one more thing. Sorry to
no, go for it, mate.
But it's just, as a developer, it's much better to develop in something like Go as compared to Solidity.
Right, and obviously, as you know, many of these different platforms that exist now as layer one solutions do offer a lot more than one programming language to interact and work with for developers, for example, or for those who are writing in code. Now, if we move back to the discussion of being agnostic, what I found fascinating also is that you really wanted to focus on those technologies that were perhaps leading the way. Now, Cosmos is one of them, arguably, and very much associated with the Web3, as they call it. So in terms of the future, how are you looking at things like centralization versus decentralization as an issue? Because when you look at Byzantine fault tolerance, for example, low numbers of nodes in consensus, we obviously want to see things change so that we see an outcome that is more decentralized by design. So are you exploring that possibility in the future as well?
So one of our core areas of emphasis is to create a trustless system of what exists in the traditional financial world, but here with software. And one of the main ways that we can do that is through blockchain technology. And I think by definition, that has to be done in a decentralized way. Mm-hmm. If there's one node operator who controls all the code, or one interface that controls all the user experiences, it defeats the underlying premise of what blockchain is trying to solve and what we're trying to accomplish. So for us, it's a huge issue to make sure that we have a large group of actors supporting our network and running the nodes for Kava.
Got it. So anything in the pipeline in terms of expansion, in terms of any other blockchains that may be onboarding or utilizing the Kava technology?
Oh, in terms of do we prioritize trustlessness in the assets that we pull in?
Well, in the sense of, you mentioned some key ones like the key protocols like Cosmos, but any that we don't know about that haven't been yet, publicized that you're going to also interact with, work with to essentially expand the reach of Kava.
Yeah, so I think one of the important considerations for us is the Kava platform doesn't necessarily care if the assets themselves are fully trustless. Mm-hmm. For example, the Binance chain is not 100% open source today.
Right.
Binance and a small group of nodes controls a lot of that. But from our point of view, the Binance token itself is still a very good asset to be used as collateral. There's a lot of users that use it, and it's very liquid. So in terms of crypto assets that we can use as collateral, its quality is quite high. Similar with XRP, right? You can argue with how centralized or decentralized XRP is, but no one's going to argue that it's not a good, very liquid asset with many users. So in that regard, if XRP doesn't have access to lending or stablecoins that are backed by XRP, and Binance doesn't as well, Kava is the ideal platform that can offer that. But then the stablecoins that we're delivering are completely trustless. No one controls the system that those stablecoins are running on.
I see, and I do want to talk to you about, especially stablecoins later and any of the assets that you're offering. It's clear also, given that you're working with some of these names you mentioned, that liquidity is a big focus. Do you think that's part of the imperative, right now, especially when we see a relatively, a stale market right now, not a lot of movement, not a lot of inflow in terms of investment, certainly not from the institutional sector. Do you think it's, really behooves startups to make sure they have strong liquidity?
I'll attack that question in two different ways.
Okay.
And the first is, one of our main drivers of Kava and choosing to do this as a product was we realized that one of the issues of growing the crypto market and gaining adoption, and if we just call it circulating market cap, was currently it's limited by fiat on-ramps, whether they be retail exchanges or OTC desks or whatever. If that is the limiting factor of what grows it, crypto is kind of destined for a slow ascent at best. Mm-hmm. But if we can actually use crypto assets as collateral to then create loans and stablecoins on top of that, effectively have hard cash and then build a credit layer on top, which is what these loans are, we can actually use the crypto assets to grow the market cap through the loans, which are also cryptocurrencies. So as we issue more of our stablecoin, we're actually growing the total cap of crypto. And we believe that's a very core underlying primitive that needs to exist for all of crypto to do well. It can't be limited just by on fiat on-ramps themselves.
Got it. And Brian, that's really well said, because really what you're saying is beyond liquidity, it's all about that use. It should, back map from use into liquidity by, by the nature of demand, from the broader market, and obviously expand beyond the crypto circle that we see right now, so that people are looking for new innovative products. So let's talk about that a bit more, Brian. CDP platform, can you just clarify that before we move on to some of the products specifically? What does it refer to? What does this mean? What's it all about?
Yeah, sure. So the CDP stands for Collateralized Debt Position, and effectively just think of it as like a bank account where you stick funds in, and based on that, that's your total collateral amount that you can then take loans off of. And how the system works is, unlike in the traditional market where you might have a fraction of collateral for your loan amount, and so it's like fractional lending, everything has to be over collateralized in this use case. So it's much more like a reverse mortgage, where you have a big asset that you stick on top, but then you're able to take a loan off of that and use it to spend if you need to for different use cases, whether that be for cash flow purposes, for payments. And I think for crypto today, the primary use case is speculation and trading. So what people would want to do, taking their Bitcoin and receiving a loan off of that, they would use that loan to buy more Bitcoin and get a levered long position Bitcoin, as an example.
So in this sense, when we see the likes of Tether and suggestions, or, sometimes even allegations that there's some issues there where they don't have anything real backing, their own so-called stablecoin. Are you concerned at all about the fragility of the market in that respect, or making sure things are properly backed, so that as you move forward as a startup and as a successful company, hopefully in the future, that the credibility of the backers and of the backing is still strong and true?
Yeah, I think that's something that DeFi generally is trying to address, where in traditional markets, even with big financial institutions, ultimately they're all based on credit relationships and trust between them, that each counterparty is going to pay the debts that are owed. And all the big financial crises have resulted from these trusted relationships failing in one way or another. So with a platform like Kava or any other DeFi platforms that are being built, they're really trying to solve that settlement between counterparties and removing that risk altogether. And what's beautiful about Kava's CDPs, they're very similar to like the CDOs back in 2008, where a lot of those lacked transparency. They lacked visibility into what the underlying assets were and what that risk profiles were actually, and they were actually like rated wrong due to the lack of transparency.
Yes, we've all seen the Big Short. We've all seen the Big Short,
exactly.
Right?
So with Kava, everything is 100% transparent of what assets live within each CDP, where they are. It's all visible on the Block Explorer, on the user interfaces, and you can then check that based on those native assets Block Explorers as well. Like, is that Bitcoin effectively locked up in, like it's been said, is XRP escrowed? Are all those assets really there? And are they, actually there in terms of like risk? So the people who are governing Kava can make the right decisions. If you don't have that transparency, it's very hard to trust that everything's working under the hood. And I think it's what's beautiful here is I don't think we can ever run into the same issues as like what happened in 2008.
And mate, you raised such a good point. It was often a misunderstanding about blockchain in terms of, one of its key assets was its transparency. Back in the day when the cypherpunk movement of 2010-ish was all about trying to circumvent arguably contemporary powers, those from the top down. Now we see that actually, as you're saying, the transparency value proposition is real in terms of credibility checking, not just also from, for a governance standpoint, but also for the consumer. There can be a bit of a window into the truth of how things operate by default because of the beauty of blockchain. Now, if we talk about some of your fundamental assets for a moment and your plans, some of the things that you are looking towards are things like multi-collateral debt positions. We discussed that with some of the assets, and there's more to come, but also self-issued loans, the value of that in terms of no counterparty requisites there. And also the stablecoins. I want to talk about those two things in detail because they're some of the things that you're really going to focus on, I would imagine, for part of, the products that you offer.
Mm-hmm. Yeah, so let's break each part down. And I think the important thing that might not be clear in all of our marketing materials is our multi-collateral CDP system is what we're starting with. We're not starting with just one asset and then stablecoins off that asset. Our system's designed to handle multiple assets from the very beginning. Mm-hmm. And that's very different compared to something like MakerDAO, which went through a period where it was just single collateral DAI backed by a single asset. The machinations are very different, and the governance levers that the stakers hold in Kava are very different than what MakerDAO had, for example, to manage stability fees in the single collateral case, which sort of ran away from them and they weren't able to control them.
Yeah, and there's also questions now whether or not their multi-collateral approach will actually work long term. A lot of economists are even exploring that right now. I mean, obviously, good luck to them because a lot of people do support, what their endeavor as well. But moving back to you, right from the outset, your agenda was always multi-collateral.
Right. Yeah. And that's our system design is designed that way, and it's because it made sense to us that as effectively what we're building is almost like a central bank of crypto. And while we can have many, many shareholders of it, the functions are still the same. And that's to manage the collateral that are that it's managing, and then also to limit the risk of the circulating supplies of stablecoins in our case, or how much assets the system is managing based on the underlying collateral. So the debt to collateral ratio. And the goals of the system is basically like chasing a moving target. Given different market scenarios and given different environmental factors, like what types of collateral are in the system, how much has been issued in terms of loans, different tweaks have to be made to make sure stability is maintained and risk is properly managed. So for us, it's about giving the governance group all the different levers that you would expect a central bank to have, such as interest rate, how much in terms of liquid assets or cash does it have the ability to issue, or debt be able to issue? Does it have any, in terms of like inflation rates, does that need adjustment? And basically all the key parameters, they have multiple levers to pull to make sure things are in balance. And it needs to be actively managed rather than passively managed over time.
I see. And it makes me wonder also, given that you're really trying to architect a new sort of financial platform that is underpinning that is changing seriously, archaic, potentially financial paradigms. I wonder, what attention you're getting from the top down, especially in the US, for example, when in many respects, the banking structure and system is directly correlated with their own economy. So do you think that you're part of a new narrative, and that perhaps, they're starting, the powers that try and regulate their own economy are actually starting to become a little bit more fearful, perhaps, of autonomous entities emerging now that are actually going to potentially change financial outcomes?
So given that, so a few things about Kava. The first is we're actually part of a group called the Proof of Stake Alliance, which is a lobbying group here within the US that's speaking directly with the SEC, the IRS, with the CFTC. And it's around creating regulatory frameworks to help them think about this. Right. I would say that they're fearful because they have the most to lose with dollar hegemony that exists in the world today. But at the same time, they're trying to cultivate innovation, and they're very open to all the conversations that we're having with them. So some of the key focuses of POSA is to create frameworks for how they should think about tokens that are staking based. And in terms of all those different agencies and how they regulate them, how to treat validation rewards or staking rewards. Are those ordinary income? Are they long-term income? What is the relationship between a delegator and a validator? Are any of them any service businesses that need to be regulated by FinCEN? Like, just answering very basic questions that I think everyone needs to have answers to. But ultimately, I would say that it's less fear and more just trying to make as fast progress as they can while remaining safe.
Well, that's good. That's good news to hear. Firstly, that you are consulting, with them, and then that you're liaising at the very least, and also that they're open, minded in the sense that they're trying to understand and grapple with the gravity of this transformation and change. But I wanted to ask you specifically on the point of stablecoins, because obviously we're going to talk about this more, but there has been suggestions at the very least coming from those parties, especially this SEC, where they're wondering, are these actually securities? I tweeted that's ridiculous because they don't function like a security at all, but I wanted to know what your thoughts are on this idea.
I think is a stablecoin a security? I'm not a securities lawyer, so I can't really answer that truthfully from any place of real knowledge. So I can only speculate on how I understand them. But take this as no means any type of legal advice.
Sure.
I think stablecoins generally are not securities. However, what they can, and what seems to be more clear, is that any business that's operating with a stablecoin is likely a money service business. They're receiving funds from one party and creating something that sort of looks like a duck, quacks like a duck, and acts like a duck. So it must be a duck. It's like, in this case, it must be a stablecoin, must be still a US dollar. And they should have the same regulations attached. And I think that's probably a fair thing. The crypto industry doesn't want to hear that, of course, because it stops some of the nice crypto to crypto exchanges and sort of them staying away from fiat and getting all the regulations that come with it. But I think in terms of their logic that they thought about, that's real. And in terms of the security, is a stablecoin a security? My answer to that is probably not. But there are cases where it does take on some security-like features. So for example, in our system, we provide a savings rate based on our stablecoin. So someone can bond the stablecoin itself and get a savings rate from that. Well, there's no counterparty that they're receiving sort of that work from in our system. But if it is a centralized system that's giving them a return based on bonding of a stablecoin, that's not really a stablecoin anymore as much as it's like a bond or like a financial instrument, which is by definition a security.
Exactly. So it almost like it's like it morphs, based on how it's used into a different asset class. But when it goes back to the stablecoin, I think one thing that is clear from you is that you're pro-regulation. You want clarity of classification so that really you can accelerate, in terms of your own platform.
Yeah, and we're very hesitant to do anything within the US right now. We have not sold any tokens to people within the US. We aren't pursuing US listings at the time being. And we would only enter the US once we believe that we have a very strong case as a utility, that there's no risk of it being deemed a security, and us or any other token holders being penalized for using the system. I do think that we have a very strong case. We have in terms of like legal memos from US lawyers, seems to be very strong on the utility side. All my conversations directly with people at the SEC, which I've taken directly myself, as well as through POSA, we're speaking with them. I think we have strong cases there, but it's still a gray area until they produce some type of framework that we could apply to our token or any token.
And Brian, I really appreciate this transparency with regard to you basically putting up a wall between Kava and the US for now. Obviously that, will change in time based on, all the efforts that you're all doing in that mutual sense. But, just to make sure that you can operate legitimately now, you're making sure that there's no muddy waters when it comes to what you can and can't do. I think that's very prudent. But if we go back now to your products where you're focused, again, the creating a stable coin, looking at loans issued in specific stable coins as well. Can you talk to us about why you want to focus in this area, especially given that the number one asset right now, digital asset, is actually a stable coin in terms of utility?
Yeah, well, it goes back to that fundamental. We believe that crypto needs to be able to create credit on top of that. And because the primary use case of crypto today is trading and speculation, a platform like what Kava is building allows people to both lever up their positions while also giving a stable coin to hedge in case they believe the markets are going down. So regardless of what the markets are doing, we give traders the tools that they need to do that and to play appropriately.
Right.
We're not going to beat around the bush and say that we have the golden solution or the the great use case that's going to redefine crypto. I think what was clear out of the winter that happened, you know, a little over a year ago, was that most of the use cases people thought they had weren't actually true. And the only things that really did succeed were the exchanges, the service providers, or basically people providing layers of ways that people did use crypto today. And we actually, through our research, found it wasn't really even payments to some extent. Like, that's still very infant in terms of the crypto industry. And the only thing that was really being used industry-wide, and it was very obvious, was for trading and speculation. So letting people take exposure in different directions.
Right.
Yeah, I don't think that's going to go away anytime soon.
No, it's certainly there to stay. But if we talk about you for a moment, one of the things we talked about earlier was that you're use-driven. So give us some empirical, you know, proof. Give us an update at the very least as where you are at right now in terms of the usage plan, you know, in the roadmap. So because obviously, as you said, you've been here for a few years building Kava. But, you know, what's the roadmap in terms of really showcasing that you are doing?
Sure. So I'll take it back to June where we started. This is when we did our announcement saying, hey, here's Kava, this is what we're doing. From there, we had hundreds of validator organizations, not hundreds, but 100 plus validator organizations come and support a series of testnets that we ran. Testnets 1,000, 2,000, and 3,000. Those all were successful, and then we did our Binance IEO shortly after. And following Binance's IEO, which was a BEP2 token, so it was like a placeholder token that everyone received, the mainnet was launched roughly 3 weeks following that. So that was just a few weeks ago to today's time. And the mainnet features staking and governance and all of the pieces required to vote on different parameter changes or propose updates to the network, but it doesn't include the CDP module itself. So the mainnet token that's, and actually it's going through a vote process right now to enable transactions, which will allow tokens to transfer from one address to another, meaning tokens can flow from our blockchain to a Binance address to be traded and vice versa, or from Binance to the blockchain to be staked. And that should pass, I think, on December 2nd, so a few days from today.
Right.
But by the end of the year, we'll be releasing the CDP module testnet, where people can start playing around with what it's like to interface with this thing, to put assets from a different testnet, like BTC's testnet or XRP's testnet or Binance or Atom, onto ours, use it in the CDP modules, see how the leverage and hedging mechanisms work, see if the price feeds work, and we'll have probably a big promotional campaign around, like, basically try to game this thing, try to find places where there could be, you know, issues. And then a month, maybe a month and a half from there, then we'll be pushing that more in the mainnet direction. And the first assets that'll be supported will be Atom and BNB.
I see. And what's interesting now is that people are already talking about Kava, and you're not even near fifth gear. That's the reality, and we're not trying to hype this discussion, obviously, but that's the truth, is that you're not yet, you know, in that period of time where you have that CDP mainnet, you know, operating. You know, this is just phase one?
Yeah, it's a bit scary when there's so much attention on you. I think Binance we definitely went from like 0 to 60 the moment we went from being like a just launched thing to tens of thousands of people had Kava tokens in their accounts on Binance, and everyone's paying attention to us. It was a very different just mode of operating a company, period, when you go from being sort of pre-launch to launch, where there's real users that care. But I do think that we have a lot of expectations, and we need to deliver on them. Thankfully, I think we're on track so far to do that.
And what's great also is that when we're talking about DeFi or finance more broadly, is that literally the participants in the crypto space can be those users. You don't need those parties to go and shill to another party. They literally can be part of the conversation of applications, usage, and usage proof. So, you know, do you guys have any forecasts or any planning that you put out for targets, more importantly, of what you want to achieve in terms of numbers related to use and users?
I think it's really hard to say today, but you do make a great point that does play into our strategy. The reason why we thought a Binance IEO was the right approach was not because we need to raise money. I think
Mm.
IEOs generally are not the best path to raising money. It's better to do that through private rounds.
Agreed.
But Binance is a great marketing platform and distribution platform, particularly with our direct users that we want to have on our platform in the future. So it was just like the perfect launch partner to do this with, because where are traders and speculators? Well, they're on Binance. And I think for us going forward, it's about finding new things, new partners like that, whether they are exchanges or things like Instadap going forward, where our users can potentially live, and using them to bring into our communities. And how we think about growth is with each asset that we onboard into this and support into the CDP platform, we expand the user base or the audience that we can talk to. So
Exactly.
if we look at MakerDAO with Ethereum, for example, they have roughly 2% of ETH locked up. If we just use that as a metric for BTC or XRP or Binance, each asset that we add, if we can get 1 or 2% of their audience, I think we're doing a very, very good job. That took Maker a long time to do in the Ethereum community, and it was the only option. I think will be the only option for these assets. So maybe it'll go faster than I think. But I'm usually of the bearish mentality, right? I choose the sort of the lowest bar in terms of my expectations I set for ourselves. Yeah, exactly. I'm not going to try to pump it up super hard. So we have to support the first assets, Atom and BNB, and see how they go. And I think from there, we can actually create accurate forecasts on the other assets as we add them into the network.
And what's interesting also is that not only are you obviously planning out a significant media strategy to complement the real tech and the real plan you have and the real utility, but also you're working with many prominent communities, not just the chains themselves, who also, have by reciprocal, a mutual association, they're also going to be perhaps spreading the narrative, spreading the word, spreading the value that you offer. So that's only going to be good for you in the future, I'd imagine. Yeah,
it's whether you're a traditional product or a financial product like ours or crypto, generally it's all about kind of an attention economy. And the interesting thing about an attention economy versus other things is it's not direct competition per se. Like the more partnerships, it's almost like Instagram influencers, right? If one Instagram influencer can do a promotion or work with another Instagram influencer, they actually share their audiences together and they both grow. Exactly. I think similar here, it'll be that for our audience and any other crypto audience that we work with. Although I am a little hesitant to see how the XRP army responds. They're very,
that's a good point.
Vocal. Of course, they'll be very strong at the start, but once you have them, you can't get rid of them. They're just like, you got to manage them from that point forward.
Yeah,
I'm also sorry, just also a little hesitant to do something like Link or something. If we ever support Chainlink, the Link Marines also a bit scary. So it's like we'll inherit these audiences over time, and we'll just have to do our best to make sure things are going well. I wish you luck, because these guys are very emotive, as and they die hard when it comes to supporting, much like sport, really. That's how I see this play out. Or they're choosing their team and they're going for it. But the great thing is you are agnostic, and they perhaps will be a little bit less emotive when it comes to supporting you. But the support is the key point. Now, in terms of the process, I wanted to ask about how Kava works in context from deposit all the way through in that continuum. Can you give us a bit of a quick rundown for those who are thinking about, the benefits, wanting to engage more, but perhaps don't understand, what they need to do in terms of steps? Sure. So our main value proposition is that you can custody your own assets and interact with the software and receive loans without needing some other counterparty like an exchange to do a margin trade or what have you. So the first step here is take your hardware wallet and plug it in. So you have access. Let's take a ledger as an example, because you can use Kava with a ledger. You would connect that, open up the CDP interface or the platform interface, and say, I want to deposit some crypto asset. Let's use BTC as an example. You would take BTC from your hardware wallet, send it to the address on the CDP interface. It would provide some address there, and then it would be effectively escrowed once that's complete. So it'd be locked up. It's still yours. It's still in your control, but you just can't withdraw it unless all your debt has been repaid.
Got it. So it's in the vault. basically.
In vault, account, whatever. I don't like vault because vault means it's safe. While it's safe from a custody perspective, I think it's much more accurate to describe this as a margin account.
Okay.
If you take out a bunch of, a loan and the price of your collateral drops for whatever reason, BTC price crashes, there is risk that your assets can get liquidated on the market to make sure it's balanced with your loan amount. So in that regard,
which is the case actually with traditional banking also. It's nothing new.
Yeah. I don't, so anyway, in that regard, I don't like vault because vault means it's like safe and isn't going to ever
my
move.
apologies, bad word.
Maker uses it, so it's a fine, I think it's a fine word. It just might not accurately describe all the risks, and I would like to be transparent with those risks. So I think margin account is maybe the better word. We'll probably come up with some other term for it as we develop more collateral and marketing materials around this. But let's call it a margin account for the time being. Some dollar amount of crypto is priced there, since you'll be drawing the loan in stablecoins pegged in US dollar. So let's say BTC is priced at $8,000. At $8,000, you deposit $100 worth of BTC. You can withdraw some amount of loan less than that. So each asset that you use will have a different debt to collateral ratio based on its risk. BTC might have something like 150% over collateralized as a requirement. Maybe an asset that is more stable, whether it be gold or a stable coin itself, maybe it's only 110%, but depending on its profile, it'll have a different debt to collateral ratio. If it's some shit coin, it could be 200%, 300%, whatever.
And that could change over time.
I don't think we'll ever support clams, but clams is a bit too risky. But maybe that's like 10,000%. Like, who knows?
Sure. So it's all relative according to risk. And is that likely to always be something that is based on your right to change that model as well?
It is based on the 100 validators or all the stakers who have a vote in the system. They can constantly maintain and update these parameters based on what they think is needed to make sure everything's working and well balanced.
Yeah. And does it concern you if you increase the number of validators, for example? Does that add one layer of complexity in terms of making some of these hard decisions? Because obviously we're all advocating for increasing decentralization, increasing distribution, which is the complete antithesis of what we have today. And that's why we want to change that scenario. But implied in this transition is some complexities when it comes to consensus. Yeah.
So for us, actually in one of our test nets, we increased our validator count from 100 to 150 just to test that parameter change, see what it would be like. Of course, there is some loss of throughput. And for our particular system, throughput isn't our primary concern. So we might increase the validator count more to increase our decentralization. But I think it really depends. I think for the foreseeable future, it'll be 100. It's still fairly decentralized. But I think in the ideal case, we would probably want to get up to 300 over time. But how fast we do that, I think, is still TBD.
Got it. And that's still a lot more than almost, all out there, or a lot out there. And if we move back to that process as well, Brian, did you want to add more into, how people can essentially, work through the steps, because you were discussing
Yeah. So once their assets are in, they indicate how much loan they want to receive. And they just, slide a scale. I want to receive this much loan. And then the system prints mints USDX is what we're calling it. That's the ticker. It prints that amount of USDX directly into their account. And then they can freely use that however they want. They can send it to a friend. They can buy more Bitcoin with it. And then when they want to use their collateral that's in the system again, all they have to do is get that amount of loan that they receive from it, repay it, pay a stability fee in the Kava token itself. So they need a little bit of Kava to do that. And then with that being paid, then all their collateral is released back to them, and they can use that freely from that point forward.
Okay. Now, here's a tough question. It's a bit philosophical, but bear with me. Now, because, one of the key assets that's going to really drive the success for the first, for the first phase is this stablecoin you mentioned. it's fundamental really to the user, essentially reaping the benefits of Kava. Given that we hear all these narratives about what constitutes good money, we hear Andreas talk about it. We know exactly now, those in the crypto space, how important it is to have something that perhaps is not necessarily what they would call bad-based money, something that isn't pegged to anything. They can, it can inflate, or it's really beholden to nothing. It's no longer pegged to gold, and the entity themselves, the government in this case, can print whatever they want whenever it suits for quantitative easing. So does it concern you at all, given that essentially a stablecoin, works in that way because it is pegged?
You mean because it's pegged to some fiat money, which can be inflated anytime?
Yeah, exactly.
So our system can be designed and point to any asset. It could be the Turkish lira. It could even be synthetic BTC that these CDPs are creating. So it's really just a system to create any synthetic. And I think it really will be following user demand more than our own philosophies here.
Right.
So if people believe that USD is no longer a good asset to hold, and it doesn't serve the purposes, we might support something else. Or if, for example, since I mentioned Turkish lira, if that's an asset that people who normally use that for payments want, but they don't have access to a positive yielding bond market for their asset, they can actually hold our stablecoin and still receive a savings rate denominated in Turkish lira, which would be a way to get a positive yield on that stable asset. So there could be like utility there, and similar like BTC. It's like you get a positive yield on BTC. That seems great if you create synthetic BTC and bond it for some period of time. So those are all directions we could expand into, but our core focus is USD because I think it's very clear that the world prices most things in USD today. And until the world loses faith in USD or has demand for other things, we'll probably be sticking on that.
So it's really a pragmatic approach. You are in every way impartial to, sort of that emotive sort of attachment to certain digital assets, for example. And really it's about just taking the process of, okay, what is going to be most likely used today, and then follow suit, as demand perhaps changes in the future. So it's interesting.
I think that's actually a core philosophy of our company that maybe we should espouse more publicly. We started, as I said, as a research firm focused on crypto payments or cross-chain settlement. And when we just realized that there wasn't a good volume of crypto payments happening in the world, we decided to build for what the industry wants today, which is better tools to trade with, to leverage and to speculate with. And similarly, I think through everything that we do is we're following sort of what does the market want and build for that, where we try to be as attuned to our customer base as we can. And we're not going to be caught up in our own dogmas. Actually, like personally, I'm a Bitcoin maximalist. I like Kava because I can go long Bitcoin.
I didn't know you were a maximalist, actually.
No,
that's going to be
I am. Like,
that's a debate for another time.
It is. I do think Bitcoin's the sort of the best crypto asset in the world because it's the most liquid. If anything, I'm actually not a Bitcoin maximalist as much as I'm a liquidity maximalist. I just think anything that has liquidity is like that's what everyone should be chasing.
I'm glad you're saying that, Brian, considering that you're focused on cross-chain capabilities as well, where there's also tokens represented. So perhaps you're a Bitcoiner, in the terms of now it's king when it comes to liquidity.
Right. Well, once again, it's like if USDT is one of the most liquid things around. I'm a huge fan of USDT, even though people might sort of scoff at its decentralization or other features. I think it's super useful just because it's one of the most liquid things out there.
Right, it makes a lot of sense. Now, you spoke of we, just briefly, we referring to your team. Does the team have all the skills it needs to continue forward? Because you did pivot from the original premise to really build out the DeFi agenda, and because you're use-focused. But are you expanding the team? Are you building the team? And what are the key skill sets that you offer to make sure we know you can do this?
Yeah, I mean, so here's something that people might see from our website, but our team is actually very, very small. And we've been the sort of same core team of roughly 6 people since multiple years ago. And it consists of myself, and I'm more of an entrepreneur and generalist. I created an esports company before that's now one of the largest in the industry and then I dove into crypto shortly following that. And my partner Scott is also an entrepreneur, but used to be a professional poker player, a very analytical guy who heads up our product. And then we have 2 core engineers that do a lot of the building on the settlement and building the blockchain side of things. But I think outside of our core team, the reason why we've been successful outside of, we have a nice group of fairly talented individuals, is actually a lot of the building has been done by our community. We led this by announcing, this is our plan. We're going to build this multi-collateral CDP system on Cosmos. And just a few days later, we had inbounds of 30 plus different organizations of also 3 to 10 man teams that were big fans of sort of this vision. And they got to work both operating nodes as our validators, but also building things like block explorers. And basically they're doing a lot of the development, whether it be a mobile wallet, a CDP scanner, or whatever it is. Like, they're actually adding a lot more of like this group of, our extended community is adding way more value than the core team itself. And I think that's going to continue going forward. But with
that's
that
really
said,
cool, because that's the spirit of decentralized development as well.
It is. Like, I don't see our goal as kind of being the top dog who's going to control the whole thing. I think it's our job to present ourselves as a leader, and as long as people are willing to follow us, we'll continue to be in that role. But it's really about empowering everyone else to make this into a platform that they want to use. And I think it's through that we can decide what assets to support, how we want to evolve over time. And in terms of Kava Labs, our job was to get this thing out there, which we have done. It's now a public chain. And now it's just our role to be sort of like the chairman or the facilitator of conversations to help this thing progress going forward.
Absolutely, mate. So, you're guiding the way, really. I would suspect even the very nature of CEOs like you will perhaps change in time, because gradually, you won't have necessarily the same role. That may change despite the imperative of having someone lead it out. Now, your advisors, Brian, they are substantial as well. I wanted to talk about them. They also almost outnumber your team. Now, you have someone like, sorry, go ahead.
I was, before we jump into the advisors, I did just want to comment on your question of like, how are we planning to grow our team and our capabilities from where we are today?
Sure.
And because we jumped into this DeFi world, what was very clear from us from a data perspective is that the primary users of DeFi are in Asia. So one of our core initiatives that we've already started is we've started building up an office in Shanghai, where we currently have like a head of BD and a marketing manager there. And we're going to continue to build that out, just because China is actually our #1 market. People think, I'm from the US and my co-founder is from the US, that Western places will be our core market, but that's actually not true. Asia is really our core market, with China being first, maybe a combination of Russia and Korea being second, and other places like Hong Kong and Singapore also leading the way in terms of the capital and the participation that they would have in a system like this. And Western, sort of the global Western world, is something that of course we address, because that's just a requirement. But in terms of usage, I would say it's like 80% coming from Asia today in terms of DeFi.
And that's a really good point you raised, because I have to admit, I even thought, given your position, given, the association, the partners, for example, that there would have been a lot more interest, in the Western regions, for example. So very clear clarification that you're very much, the first step is to enter into that Asian space, into that market where many instances, the regions are quite progressive, or even countries, in terms of blockchain, in terms of potential. We don't necessarily know what the stance is, perhaps, for example, with China in the future with crypto. What we do know is that there's a lot of attention in Asia right now, and there's a lot of weight just more generally when it comes to the overall market cap of crypto. A lot of the money's there.
Yeah, and I would just say, like, the partners that we chose from the early stages, like S&Z Holding, which is based in Shanghai. They were one of the groups that first translated like the Ethereum white paper, brought Vitalik over, and started really spreading the gospel of what Ethereum was. They were kind of the core folks behind that. They're also the core folks behind Cosmos and a number of other bigger projects. They're one of our key partners as we go into Asia. They also run validators as a service. But then there's also partners like HashKey, which is it's a subsidiary of one of the largest public companies that actually focuses on automobiles, strangely enough. But they were, Chinese endorsed. It's a Chinese public company that then is the only one that's really allowed to pursue blockchain pursuits. And it became LPs, or like started Finbushi, early VC, started Hashkey, and a number of others. And they produce the Oneshine conference, which is the largest conference in China about blockchain technology. And they also have HashQuark, which is their subsidiary that runs the validator business, which is also supporting
you
Kava.
are very, very well connected when it comes to partner support in China. Let's be real about that. How did you forge those connections? Because they're significant ones without, again, trying to suggest any, FOMO here. I don't like that stuff, but this is real. Like, these are really big partnerships for that region.
Yeah, I mean, Oneshine is a multi-billion-dollar company, so we were very lucky to find these partners, and truthfully, they came to us. So I think we fell into this really nice positioning. It's probably because we were in crypto for a while and watched what was working and what wasn't. And when we released this multi-collateral CDP platform, that's effectively like MakerDAO and Cosmos, just to keep it clean and simple, it was such a clear value proposition that resonated that we had these groups, as soon as they saw our blog post that we put out, within 2 days, we had finished a private sale round with
I'm
a
not
number of people
surprised
from around China and Korea and
I'm not shocked, given that a lot of the money is there, and also look at the success of Maker. Look at the success of DAI. I mean, the market cap's been substantial. It's been very positive for the Ethereum network and for all those parties that support Ethereum. So in that respect, are you really bullish on your ability to capture a significant market share of this industry? As we see already proof that a lot of people do want it?
It's interesting. So like our partners in Singapore is kind of jokingly, whenever they introduce me to any of their friends or partners, they say, "Hey, meet Brian. He's MakerDAO at 5 cents."
That's funny.
Yeah. So I would say that where we are today, we've probably gotten a lot bigger very quickly, but we still have a lot more ability to grow going forward. As you said, we're just taking our first baby steps into this. And how I think about it is like, we're not competing with someone like MakerDAO, which is very Ethereum focused. They're going to have a hard time moving their core user base and their platform onto anything else like Cosmos. It just isn't really practical. We have this second mover advantage, strangely enough, to start interacting with all these assets that don't have smart contracting capabilities.
Exactly.
Given the system that we built. And what's so nice about that is we don't need to spend our company resources, which as a small company are very limited, competing to take market share away from Maker. Maker already addresses the Ethereum community quite well. And while we can be generalized and support Ethereum in the future, it doesn't make sense for us to spend there. Instead, we can focus on a market like BTC or XRP, with BTC being 10 times the size of Ethereum, and where there's no competition, or XRP where there's no competition. And we can just do that.
And what's interesting too, also, not only are you, I would argue, a dark horse, in terms of people, well, maybe not even that, you're just not the unknown, right now, compared to all of the strength of the narrative out there for something like Maker. But if indeed you start to really showcase what you can do and become, more prominent in terms of just known as a digital asset, I wonder if some of these parties will actually transition from, their interest in investments in some, for example, like DAI and Maker, and move across. Because already you start to see right now is that people shifting from certain positions, as they're trying to pursue more utility.
Yeah, I think one of the interesting things about our positioning and our just like where we are as a company is we have direct relationships with like Binance or Ripple, and we can bring a lot of value to their ecosystems where they're actually incentivized to see us really kickstart and grow rapidly. And that's not something that a team like Maker really has at their disposal, just because they're limited in sort of the technological capabilities that they have.
Right, and that's affirmed also by the advisors, just to jump in there, because you have someone like Sunny from Cosmos, you have Roderick from Lemnis Cap, of obviously connections with, important VCs in capital, but then you also have Jack, with Tendermint, and then with Robert from Compound as well. So you are very strong in terms of the associations and the network to reflect this kinds of potential and this kind of growth in the future.
Yeah, I mean, their advice is very helpful. We could have had a huge advisory board, but we chose people specifically that we wanted the opinions of that could devote their time and resources to helping us grow.
Yeah.
I would say that where we are particularly strong, and what I would really like to see us move forward with, and what I'm hoping happens, is that teams like Keep and TBTC or Compound start seeing what progress we make within the Cosmos ecosystem, and they start seeing the incentive to move things that they're struggling to build on other blockchains, and then taking that once we provide a basis of a lending system like Maker has done for Ethereum, then all of a sudden, if we have USDX with $50 million or $100 million as the base for something like Compound to move over and start playing with, it becomes very interesting. But until we actually do that, it's going to be hard to make the case for Compound to move off of Ethereum. So I think that's one of our key objectives, is to basically create a very fertile landscape using the partners that we have and the technology that we're building to then create this new DeFi place that can involve many, many more assets.
And mate, I can already hear that you have lofty goals, and you certainly want to take some of that market share, dare I say, from the Ethereum network. And, that's reflected also in the vision stated, in your literature. You want to be number one when it comes to DeFi applications, and you want to capture, a significant user base. Perhaps not rush it, but really showcase based on proof. Is that still true? You do want to be number one in DeFi?
I think we want to be the de facto or the go-to platform when it comes to lending. I don't think that we necessarily have to be the number one stablecoin created. While that will be something that we focus on, I think it's really going to chase user demand. What's really interesting, as I said, because we can be a generalist synthetic platform, we actually could create something not pegged to the US dollar, but pegged to Tether, as an example.
Right.
And depending on how the market responds to that, with a crypto-backed Tether, that might actually be more trustworthy than Tether itself, because there's actual, very clear assets that back it. And it'll be up to exchanges if they actually want to support deposits and withdrawals for Tether in our version of synthetic Tether. So there's like a lot of just interesting things, but my point is that we're going to follow what the market wants. We're not going to be specific on just driving the stable coin. Instead, we're going to be focused on driving adoption of and one of our core KPIs that we define for ourselves is capital under management of our software. So the more assets that we can get to flow in to the Kava platform, we perceive that we're doing better and better. So our goal is like whatever is going to drive more flow of assets into us, that's what we're going to prioritize.
Well, mate, you've certainly got powerful partners, to support you and back you. The names, as you mentioned, some of them, but also you've got those like Arrington, Token Research Group, as I mentioned before, Lemnis Cap, Stake With Us, and the list goes on. So I'm looking forward to seeing pro support from the US, if indeed that comes, because that's going to open the door then to a serious market as well. And already your market is significant for the future. So it's looking good for you in the next few years, I would argue, because, if indeed, fingers crossed, but I mean, it's looking good, let's be real, because the SEC is certainly not suggesting that they're anti-blockchain, and they're not anti-crypto in the sense of utility either. That's why we had the CFTC. So things are looking good, but I wish you well in that front, because it's a challenging arena to break into. They haven't even worked out their regulations yet. But right now, let's talk about something that is on the tips of everyone's tongue, and that's the token itself. Utility token by design. I firstly wanted to ask you about lockups before we talk even numbers, because I want to know I can trust that the investors in Kava aren't going to dump on me.
I need to trust in that too. So we worked actually very closely with our private sale investors, because we started with a particular release schedule that I think a lot of projects start with. They're just trying to raise money and kind of get started fast. And it's not always thought with going to the public market in mind right away. And for us, because we just, I'll be real, it was much faster progress than we thought. We didn't think we were going to announce in June and have an IEO before the end of the year on Binance.
Right.
It could have been an IEO on any other platform, much less like the number one sort of altcoin exchange in the world. So we had to redefine what our plans were based on that sort of traction and progress for ourselves. And that required me to go back to all of our private sale investors and say, look, guys, if we have any amount of liquid tokens in the next, not just 3 months, but even in the next year, it's going to be a very bad signal to the market. I want to have a Genesis account where all of the accounts at the start of the blockchain that receive tokens never move their tokens.
Exactly.
For as long as possible. I want that to, if a single person moves their tokens, it sort of signals bad to the market. If I move my tokens, if you move, your tokens, Mr. VC, everyone is going to be spooked. And it doesn't matter if you're just trying to de-risk or whatever. Let's just, let's be real.
Big question mark as soon as we start to see those movers.
Yeah. So what we were able to do was we got everyone to hold hands together and kind of walk forward without, trusting in us, but trusting in all the other private sale investors, which was a large task in itself. Mm-hmm. And I think we have the most aggressive lockup structure of any token project.
That's
ever.
Good, because
if you can show me one.
IPO. That's good to hear, because we want to make sure that these guys are here for the long term and they're not going to essentially just, pump and dump and move on to the next because of their privileged position and because they have privileged capital.
Yeah. So just for like very specific numbers, and this is all in the Binance research report that was released, mm-hmm. but no private sale investor has the ability to sell tokens until 6 months after our IEO. So that was just 100% locked. Okay. And then even then, every private sale investor has agreed to running nodes on our network. So no one was just like a VC that's just in there for a financial return. Everyone is required to run a node or a validator and participate in the network.
So they're going to do real work for
2 years. For 2 years. And their ability to use their tokens is based on that work. So, and there's certain milestones made in each contract that says, they might get some at 6 months, some small portion, 10 or 20% of their total token amount. But if they stop validating or if they stop doing that work for any period of time thereafter, they're actually forfeiting all the rest of their tokens.
I love it, because you're putting pressure on them then to make sure that they're part of the longevity of the ecosystem of Kava. And that, having talked to so many CEOs and having discussed token modeling at length, because it's a big, focus of mine, very mm-hmm. rarely do you see that built into the agreement of the SAFT, for example, the contract. So it's great that, they forfeit all of that if they're not going to continue supporting Kava.
It was both important from a market's perspective to have it structured this way, but it was also very important to have it from a regulatory standpoint, to make sure that everyone was purchasing tokens to participate in the network, not just for financial gains.
For utility.
And they were stating they were going to do work themselves.
Yeah.
So from our perspective, if we talk to the SEC, we didn't sell this to anyone who's planning to resell it.
Got it. So how much did you raise in total?
So in the first rounds, I think they totaled up. So we did a private sale sorry, I'm using the wrong terms. We did a seed equity round before we even did this blockchain, which included the likes of Ripple, Lemnis, Digital Asset Fund, and some others. But then in terms of the token sale itself, that started in June through August, and that total is 5.5 million. I might have the number slightly off in my head, but it was roughly that. And then in the IEO, we raised an additional 3 million through the.
And that's quite a lot considering the bear market. So you've done well, obviously. Now, looking at the scenario play out now, what I found very interesting, to be totally transparent, is that the price movement of your token in terms of volatility hasn't been, immensely volatile compared to many other assets. So that's been interesting. Now, if we can talk about perhaps, the market cap, I did want to acknowledge that one thing that we don't tend to see that much of is total supplies being, say, under 15 mil. In your case, it really is. So scarcity is built into your model as well, Brian. No question of that. In terms of assets, your circ supply is, a little over half, 8.9 mil now. But as soon as I saw that, I thought, okay, here you have, a very significant asset that's going to make waves potentially in the marketplace, relatively scarce, or very scarce, in fact, when you compare it to the total supply of many different assets out there. So, that's a big deal when we're talking about significant use case potential and relatively scarce asset.
Yeah, it's all by design, and a lot of that scarcity, thankfully, was due to a lot of this assistance and guidance of Binance. They actually acted almost as like IPO advisors, where they helped us redefine what our release schedule should be. And it wasn't to sort of maximize the return of like Kava Labs, the company, or anything like that. It was actually given, as you said, the bear market. We just had to make sure that when we introduced this token to the market, it was literally just creating a token that was scarce and just applying demand to it without sell pressure from any of the investors that purchased it maybe at a lower price, right? And that's something that for us, how we see it is we have to grow the market now, both in terms of buyers and sellers. We need to build that up before allowing any other person who might have an advantage, like an early investor, to even participate in that market. So our efforts on the market side is to really build up both the price support and the depth at all times, and grow that organically, and just keep applying sort of more and more demand to it, whether it be on Binance itself or expanding access to Kava by listing on other exchanges in other regions where currently, like you said, in the US, people don't have access to it, or in Korea, they might not have access to it. Focus on that, so apply more demand and make sure the depth is good, and only then start slowly releasing the ability for private sale investors to liquidate tokens into the market.
Exactly, mate. And I mean, we don't mind at that point when the liquidity is sound enough for the ecosystem to cope with that, or the network itself.
Yeah. I mean, just no one wants to see a big, sort of price crash.
No, and
because,
we're sick of it,
some
mate.
big whale
We're
comes
so
in.
sick of that kind of crypto crap that goes on. But again, the reason why I want to have this transparent discussion is because you're utility based. In the legitimate sense. You're not just simply one of those. Let's call them shit coins, the type that are really just driven towards short-term profits and short-term gains, but there's no proof of value in any respect. And that's the ultimate shit coin. And then they just exit. All of them go to the Caribbean, and have a big party. So really, once again, we want to make sure that the long-term structure's there from the token modeling, planning, so that there's integrity built in and there's ascending liquidity and liquidity support. Now, for that to happen, you also, I imagine, are looking in the direction of extending liquidity support into different exchanges, those that are reputable. So are you considering that in the future, opening up that potential or allowing those parties to come in and knock on your door and have a conversation?
Yeah, so the exchanges, we've actually started conversations with, I would say 30 plus different exchanges. They've reached out to us. They've seen that we're, in the 5 million.
They've seen all of the,
volume.
They've seen the money.
They see all the volume going on Binance, and they say, hey, I want to make some transaction fees. Kava looks, pretty good. So in that regard, like, it's been nice that it's inbound, similar to our investor round has been inbound. So, we're lucky. I know that's not true for a lot of projects.
You're very lucky, but how do you decide? How do you vet which ones,
We look at it in terms of access. It's actually better to consolidate liquidity on a single exchange because it's a better trading experience for everyone involved. There's less price slippage, depending on the sizes. There's less risk in terms of different prices being on different books. Like the worst trading experience for anyone is having a very thin order book where you want to buy or sell and it moves the price 2+%. It becomes a risky thing to just participate there.
Especially when they're not legitimate actors in the space, that they're doing wash trading for themselves or something like that.
Yeah, exactly. Sorry. So to that point though, anecdotally, at least the information I have from like our exchange partners and market makers that we work with to seed liquidity is that almost 95% of our volume that we've seen over the past month since we've launched has been organic. So it's actually not from any direct partner that we're working with. It's actually all market driven, which it's a sign that it's a very healthy market. So my fingers are crossed that continues. And as we expand into other markets, similarly, like we'll have to work with market making partner to seed the early liquidity and make sure the trading experience is good. But the idea is that we spread out. We open up access to key markets that currently don't have access to Kava. So for example, like a Korean exchange, Upbit or Bithum or something like that. Right. And then you
never know, it might happen in the US someday with Coinbase.
Or in the US. I mean,
never know.
Most hesitant, fingers crossed. US is the one. I mean, I would love if I could buy tokens for myself.
Yeah, I mean, it'd be great in the future that, you know, the US market isn't precluded from all of these, you know, technological innovations, which happen to be tokenized. I agree. So the future essentially is looking bright, though, in terms of if you've already got all of these parties knocking on your door, you don't sound stressed at all about, you know, the opportunities afforded you. But I do like hearing that you're really focused on making sure that the liquidity is legitimate and it's real. That's a rare conversation.
Like I said, I'm a liquidity maximalist.
Right.
So I you know, trade in my spare time, and I understand what makes an interesting experience for people. And if liquidity is not there, it's just not good for anyone. It's not good for the project. It's not good for the participants of the project. It's not even good for the speculators that are trying to just you know, play the markets for fun.
And not good for the broader space, because eventually it moves people out.
Yeah, exactly.
So, mate, let's talk about some of the other aspects of the token in terms of potential value propositions that really, I guess, potentially infer greater value in this asset. And these are things like staking. I want to talk about burning as well. Have you got anything built in there? And also fees and incentives. You know, you've got a lot going on for your token.
So for the Kava token itself is both an inflationary model and a deflationary model. Like I said, we're a central bank. We actually have multiple levers that we can pull depending on different situations. So because it's a proof of stake system, similar to the Cosmos Hub with Atom, there's block rewards produced that are part of the incentives for the proof of stake model, where people will stake their assets and they risk actually getting slashed if they misbehave, if they do something like double signing transactions, or they don't have good uptime with their validator. Their assets of Kava can be slashed as a punishment or a deterrent. But then what the upside is that they can earn a variable inflation rate, which varies between, I believe it's 3 and 20%, depending on how much Kava is being staked at the network at any time. So in like today's state, it's 7%, roughly.
Which is pretty damn good, really.
It's not super high, but it's a healthy amount that still provides good incentives. And I think of it almost as like subsidies to validators to help secure the network. It's like the price of security for the network. Where in like a healthy economy that's very robust and growing, you probably want something a bit slower, like 2 or 3%. But if it's a blockchain that needs to have more stake to be secure. So for any PBFT system, you know, practical Byzantine fault tolerant system like Tendermint, you want to make sure that your stake percentage is above 67% at all times.
Always.
Otherwise, it's very, very risky, right? So that's when you increase the inflationary rewards. So anyone who's staking and validating, they actually get a disproportionate amount of that, and incentivize more people to come in and participate in that way and provide that security.
So serious economic, you know, principles are built into this, because, you know, we're talking about banking principles, banking, you know, fundamentals.
Yeah, and so security is probably our first and foremost of all. Like we actually had a false start with our mainnet launch, where we tried to launch and certain risky situations occurred where we actually had a fork on block 2 because different validators who were part of our Genesis actually had different Genesis files for some reason. One of them, or a few of them, didn't update the files accordingly, so they didn't match, and it caused a fork. Then a different validator ran to a double signing issue and got slashed. And it was just messy, and we felt that there's so much financial risk, given that our blockchain at that time was worth roughly $100 million in total assets. It made no sense to do sort of a rush start for progress, for the sake of progress, where instead we just paused everything, canceled it, and then said, let's fix these issues, make sure that it's 100% solved, and relaunch.
That's awesome.
As soon as that's the because it's people's money. Yeah, right. It's people's money at stake here at the end of the day. So we need to do right by that. And in that regard, safety and security are always.
I really appreciate hearing that sort of stuff, because you do respect the fact that people literally are putting their money into this. This venture. So in terms of, you've mentioned staking in the asset, proposition there, or the value add, fees and the incentives are clear. What about burning? Are you doing anything like, we see like with the BNB token, for example?
Yeah, so we're not doing active burning of like Kava Labs is taking a bunch of Kava and burning them ourselves. But as the CDP system is used, the users are paying a stability fee in the Kava token. So we can think of it as a function of some percentage of the loaned amount ultimately gets paid as a stability fee. And that fee is either 100% burned, or some of it is reallocated to offer the savings rate of the stable coins. And I think of it as like if we want to increase demand for the stablecoin USDX, we want to increase the savings rate that someone can receive when they bond it. Currently, the competition with Tether is 0, right? But if we offer 1 or 2%, that might be interesting. If we want to make it really interesting, we can ratchet that up to 4 or 5. But ultimately, that's coming from kind of these stability fees that are the users are actually paying, and that burning is either 100% burned and returned effectively as like a cash buyback or a stock buyback or a token buyback to the Kava holders themselves, or if the token holders want to see more growth of the system and use of the system, they're going to actually allocate a portion of that to the savings rate and increase demand for the loans or the stable.
And I suspect some of them will, because obviously that does make it more attractive for your asset.
Yeah, it should raise the value of the asset
very much
as
so.
Well.
Yeah, very much so. So you've really thought about a lot of the different aspects of your token to really build for inflationary and deflationary models, which is just interesting, in every aspect, considering that we see such an immense market share for not just for, as I mentioned, DAI and Maker, but we also see that with Tether. And you're literally trying to capture both markets, and that's huge, in the scope of the next few years coming. Now, just briefly, I wanted to ask you about Binance, given the recent, dare I say, FUD. But I only ask you this, more objectively, in the sense that, do you have any concerns, given that there is a degree of fragility more in the broader landscape right now? We've already alluded to that with Tether. Are you at all concerned, because you do have a very unique relationship with Binance, and they are, I assume, there with you for the long term?
Yeah, Binance has been a great partner, and there are industry partners, or I shouldn't say partners, but industry players attacking Binance through FUD and fake news and other things. And I also know that no exchange is immune from regulatory pressures, just generally. So that's always a concern. And we treat this very much like an investor would their investment portfolio, where we look at Binance as a very core partner and one that we're leaning very heavily into. But at the same time, we don't want to be a project that's just a Binance project. We really are trying to build to support the entire crypto ecosystem.
Got it.
And in the same vein, we don't want to just have all of our risk be, if Binance succeeds or fails, we succeed or fail. We need to have, multiple kind of places that we can find our user base from. So we will be looking at future exchanges to branch out from here, particularly, as I mentioned before, those that increase our access to customers that Binance might not particularly have or have good reach into.
That's good to know, because no one wants to invest in something that's at great risk, and has this over leveraged association perhaps with one particular entity, regardless of their performance. So I guess it's great to see that you're standing on your own 2 feet, and in time, by design, you'll have more arms, more fingers, and fingers in different pies, essentially.
Yeah, right.
Now, mate, just finally, one more thing, and that is your marketing strategy. Obviously, there's different strategies for different startups, but you understand crypto. You also understand the imperative of having true utility as you move forward and actually have a viable company as well. But in the crypto sense, what is your plan to really get the name of Kava out there? Because it's one thing to have utility, and it's another thing to have a great plan, but to actually get the community really aware so they can start to trial this. How do you do that? Yeah,
it's an interesting challenge. Each crypto project has their own core user base, and as I alluded to before, I think we're very fortunate in the fact that our user base are the traders themselves. So being able to, and actually from our rollout, what our initial focus was actually on more of the technical folks within crypto, the people who are running nodes, who are validators, who had existing businesses like that, because that's what was needed to kickstart and launch our blockchain in a safe, secure, and decentralized way. And since then, we've done that. So now going forward from this point, our marketing and our messaging is changing very much now into the CDP users, and to who those are specifically are traders who hold a good amount of the assets that we're integrating, whether it be BTC, XRP, BNB, or Atom.
Right.
And in the short term, that's going to be our focus. So as we integrate each new asset and we build support for that, we'll be doing very targeted campaigns in different geos, primarily, as I said, Asia and the greater Western world. So a two-pronged approach, one in Mandarin and one in English, to drive usage from the people that we can reach through these audiences to move their assets into our platform and start using it. Okay. And we'll just snowball that as success begets success, and as more assets come in, it becomes safer perceived safer for everyone else to also use it. And hopefully, it spreads out from there and has a good network effect.
Right. So 2 tough questions. How do you then expand that into the mainstream arena where very few people, whether they be enterprises or users, don't know anything about crypto? How are you going to, enter into that market or permeate that? And also, the other aspects as well. We talked about those parties that are currently using crypto and those that are well and truly versed in that, but exploring the market beyond, in the crypto sense beyond that, to perhaps those parties that are enterprise driven in that sector as well. And how do you really broaden this out?
So I might take a step back and say that's definitely not our challenge, since that's not our core user base. Our core user base are active crypto traders today. However, as a company and as a community, what our focus will be on to reach those, I think of it very much as like distributors who then have retailers. And I come from a hardware company. Previously at Fnatic, we had mice, keyboards, and headsets that in different countries we had distributor partners that then worked with a series of retailers. Similarly here, I think of integrations as the distributors to then reach the retail audience. So a partner like Coinbase is building out staking and support natively in their mobile application for more of this like broader retail base. And what they'll see is sort of the Kava asset and some interest rate that they can receive if they hold it. And similarly, USDX and some interest rate if it's bonded, all natively within their wallet application. And I know a number of wallets and different direct to retail companies that are building integrations like this, both for our asset as well as other assets that exist in the space. So I think those will be the main ways that we reach the broader audience that might not understand kind of the underlying machinations of what we're doing, but they can still benefit from having a stable asset and getting a bond, like a positive bond yield off of it, right? So that's at least how we think about it. So from our side, really it's just like a BD effort to incentivize and get those integrations with the partners that we think have the widest reach to the broader audience.
Well, Brian, there's a lot going on for you, mate, and I've had a lot of fun listening to all the development. I know it's been a long interview. If anyone's still listening, you have survived. But the idea of this was to really allow Brian to let us know the full scope of what Kava's trying to do without an injection of FOMO or hype. And hopefully, we've projected that through this conversation today. Brian, thank you very much, mate, for making the time today. It's very clear that you are in a very specific vertical right now that is hot, as they say in China, but that's because utility is the imperative. We are all sick and tired of shit coins, and we definitely want to see proof of utility. And right now, when it comes to money, it's very clear that crypto offers a technology that is beyond just now an ideal or some sort of conceptual possibility. We're seeing proof of this. So, mate, you are in a very good position with a lot of support behind you. I wish you all the very best as you continue to showcase the benefits of the blockchain through, finance, changing finance, essentially making sure that we can engage in better financial outcomes through shifting the entire paradigm itself. So keep going, mate, keep building. And if there's anything you want to say, to just finally let the people know exactly where you stand, go for it, mate. This is, the closing statement for today.
Yeah, thank you, Brad, for like the very in-depth questions, and hopefully they provide a lot of insight to the audience listening for what we're doing and at least where we're headed and what we're aiming to do. But I really appreciate kind of like the thoroughness and the insights that you've brought to this as well. So for everyone listening, and my final closing statement would be, if I had to choose one, if I had a billboard somewhere that could say like one thing, I would say, I'm very excited. And you know what? I'll just end on this. I'm very excited, despite not going to the US, that we're going to offer trustless software that anyone can use within the US that might not have access to margin trading. The Kava platform is there in a censorship resistant way where you actually can get a loan on your crypto and margin trade with it.
Yep. And mate, we couldn't ask for a better thing, you know, and the platform, the CDP platform mainnet, it's coming, you know, there's a lot still building for, so look out in 2020. And as you said, mate, all the assets are there for transforming, you know, financial scenarios where we support a new ethos, and you're leading that out, mate. So keep going. And hopefully we can catch up for shorter, sharper interviews, really focused on key aspects in the future. But yeah, I'll certainly be, you know, texting you as you build to say, can you come on, let's talk more, because there's a lot, you know, you're going to be doing in the next few years, I'd imagine.
Yeah, I would love to do it. Thank you again for your time. And if anyone wants to join the Kava community, you can follow us on Twitter at Kava_labs. And on Telegram, it's t.me/Kava Labs.
Well said, mate. And on that note, I will put all of that in the description below so that it's easy to access, and make sure, you know, you do check out Kava, do your own research, make your own decisions. It's all about, at the end of the day, utility and real proof of value when it comes to this very complicated space we call crypto. So keep going, Brian, keep building, and we'll catch up soon.
All right. Thank you. Bye, guys.